wanted to make a video kind of giving some more details on what I do and I track when I was, and I still do it when I backtest, but also when I was initially backtesting and figuring out my strategy and the best time to trade for me and things like that. I know it's very daunting, very repetitive, and it gets boring when you have to go through that phase of backtesting and learning the charts and your pairs and stuff like that. That's why they say start with one or two pairs and just figure out how they move and things like that. So I have my material on what I tracked and what I documented to be able to figure out what's best times and all of that. And I have those as emails or what you call PDFs. But I'll also plan on making videos like this, kind of just breaking it down and reading it. So I already kind of went through these and set some up, and after I had did them, I was like, I should record this. So right now I'm on the micro Great British Pound futures. So with this, looking at these charts and doing a back test and reviewing the charts to seeing which is the best setups and things like that, I noticed that on Great British Pound, the 2 hour and the 1 hour shows me some good setups or some good candles to look for and stuff like that. And so that's what I went to. And so when I document this stuff, I write all these notes down for each pair. Like, okay, this pair does good on these days. This does good on at this time periods, or they typically have to hold this for 2 hours or 3 hours or 3 days and things like that. And you just write all those notes so that when you have your pairs, you have those and you don't always have to just remember every little thing because you have it all written down. So with this, I saw that with my setup of how I use my 4 smooth movement, really it's only 3, but the algorithm for this 4 works better for me. I got my RSI, and that's pretty much it. Other my support and resistance line and trend lines and things like that. But I saw that it broke my 225, the red, and then it also broke down past my 40 and my 75. And so the yellow is the 75 and the purple is the 40. So another thing with this pair is, like I said in my last video, I'm going to go back to what I did my back testing on and my strategy for, and what I had the data for, instead of trying to fast track everything and speed up the process. And honestly, if I do it this way, it'd be as successful anyways. So what I mean by that is, so now more of a swing trade. Now I'm telling myself I'm going back to looking for setups on Mondays, Tuesdays, and Wednesdays primarily. Thursday, if there is a red folder economic release, then possibly, but primarily Monday, Tuesday, Wednesday. So that way, if I have to hold them until Friday, it gives me the time to allow the trade to play out. So what I'm doing now is, and there is a I don't want to waste the time to try to find it because I haven't used it in a while, but there is a indicator or something you can add to this chart to show you the time periods. Honestly, I haven't done it in a while. I can't remember where it is, but so I'm just gonna go off site. So I saw that this was up here. This was on the Monday and leading into Tuesday. Leading into Tuesday is when I saw this candle. If I'm going over here by the volume and I see this candle, the volume on this candle was 546. Then this candle was almost 800. And the next candle was almost 800 as well. And that next candle was a hammer. So it showed me that wick was trying to get back past the red line, but it couldn't quite get it. So seeing as it had already broke this and was breaking those, that would have gave me an indicator of getting in. And I would have got in slightly below that or waited for that candle to close to give me confirmation on that. How I'm setting my stop loss and things like that is, seeing as that wick was up there, I was go to the wick, but since the wick was so close to that 225, I kind of just pushed it up there and made it an even 50, and I went for a 1 to 3. And as you can see, this one I took it Tuesday at 9 a.m. And it would have led me into Thursday around 3 a.m. and it would have hit my take profit and closed out. Leading into the next week, Friday, you see Friday had a drop, but I wouldn't have been paying attention to that. I wouldn't have been trying to catch that. And not to mention, that's one whole candle in the hour. This time period, looking in here, I'm seeing that it's kind of ranging. It's trying to come down, but it's not really breaking away from the smooth moving average like it did here. So this would be a time of just checking the markets and seeing what's going on. But I also document typically on average what's the time spans too in between trades and gaps and stuff like that. So this was almost 2 weeks where it was kind of ranging in here without any clear indicators. Then coming into this week on a Tuesday, I saw, or you can see that it was already staying below this level. Then it tried to come back up here, but it couldn't reach it. Again, you see these wicks up here, and you see it bouncing off of the 225. That would have gave me an indicator that, okay, now it may want to continue down, because over here it wasn't near the 225, so anything could have happened. But since it was near the 225 now and it couldn't get past it, that's more confluence, or gives me more confidence or higher probability that it'll go down or continue down. So that would have been my entry, that candle right there. And again, looking at the volume on it, I'm seeing it's 423. So that gave me some confidence. That would have been on a Tuesday at 11 a.m. Got in. Again, stop loss was right above that candle, making it a 25. I'm going to try to stick to trades in the 5s. So 5s, 10, 15, 20, and so on. That was a 3. And that ended the next day at 1 a.m. Measure the difference between these two. It's like a week. Then I saw this. These candles couldn't quite break the 225. So leading into this week on that Monday, I saw this strong, you see this strong candle, or this candle breaking that 70. It already broke the 40. Now it's breaking the 70 with that. And that would be my entry, with my stop loss being slightly above it for 1 to 3. Measure this. This is a longer period. This is almost 3 weeks. Price kind of ranging and not giving clear setups. The only clear possible setup that I might have taken or looked at would have been this area in here. Simply because, again, it's on a Tuesday. This is a strong candle coming up, 300, a volume of 300. And it's also kind of breaking off these, The only thing with this though is breaking off all of them, but at the same time, I'm used to the 40s and the 70s being close to each other, but typically the 225 is apart from it if it's going to move in a direction, um, or changes directions and certain things like that. So seeing as this is still kind of all three lines grouped together, it lets me know that this is possibly still in a range until we get over here in this area, and you can see the difference in the drop. So over here, you see it's a drop and it has little whatevers, but over here you see how far apart from the 225 it is, and then from that, by the time it reaches, it gets over here and then continues to want to go down. Looking at this, the entry point would be on, what's this, a Monday, 7 a.m. stop loss right above that candle for 1 to 3. This is a slightly different situation because there was a lot of movement for this week. So therefore, I got this trade in, or you could have gotten this trade in on a Monday at 7 a.m. and it would have take profit by Tuesday, 1 a.m. And then had you looked into the market again, you would have saw that it had a little bit, but it wasn't enough volume to make it kind of have a stronger retracement before it continued down. So therefore, this candle was another entry at 8 a.m. Once that candle showed that it had a strong indicator and wanted to continue down, this one confirmed it by breaking the previous wick levels with a strong candle continuing down. And this would have been able to been held until Wednesday at 8. So whatever, and Tuesday 8 a.m. Yep, Tuesday 8 a.m. to Wednesday 8 a.m. So 24 hours on that. And then the rest of the week would have been just chill because you already had 2 clear setups. What day is this? This is Thursday. This is nice. It's breaking. The 225 is way up here. This is nice, but this is on a Thursday. So I don't know. I would have taken that. I probably wouldn't even been looking at the markets unless it would have been like some news. And even if I did, it probably would have been like a 1 to 2 or 2.5. Yeah, see. But I don't know if I would have taken that. The only way I would have taken that if I had it just so happened to be in the market or on my laptop and saw this. Then the rest of this is ranged until you get to this Wednesday. This Wednesday is nice because again, it's showing me that I'm seeing these again are typically close to each other. But then when I see it, the price break from it and then breaks through the 225 that was apart from them, it gives me an indication that there might be some volume in that direction. And so that's what that showed me. 6 a.m. Wednesday would have been able to hold until Thursday and got to take profit on that. This gap. This week. Nothing really going on in here until you see it break from this. As an indicator on a Wednesday at 9. Stop loss would have been right below that wick for 1 to 3, which would have been on a Friday. Nothing really going on in here. Even though this wick breaking was very strong, it's on a Thursday. And sometimes I don't really like get on too big of a candle like that because then my stop loss got to be way up here, which means I got to go for more profit. So I try to look for better looking candles that are strong but not necessarily too strong, where I can get in and get out. So that's the Thursday. I probably wouldn't have been looking too much at that. Leading into Wednesday, leading into the next week, Thursday again. I think some news was released on here, but even then, I would only took this had I been actually catching it in the market and seeing like, oh, this is a nice setup right here, because it came back up, but then it came back down again this wick. But then that strong candle, once I seen that candle break, it would have probably been something like this, probably like a 30 stop loss. That's close. Yeah, that's about straight. It probably would have been something like that. Finish for the day. It would have been a 1-day trade, and then that's up to date. So again, like, this is just the stuff that I was tracking when I was doing my back test and developing my strategy, what works for me, and I would take all the notes on this. So Great British Pound, I would say typically I'm going to get 2 to 3 trades a month on there, 2 to 3 good setups on there a month. They're going to be typically 1 week apart from the good trades, but once you have those, there'll be periods when there's 2 weeks or 3 weeks in between the movements. So again, there may be months where you only get 1 good trade, or have 1 good week where maybe you can get 2 good trades in, and then the rest of the month it'll consolidate and stuff like that. And this is just all the information to track and put down, so you can say, okay, it typically moves around 7 a.m. or 9 a.m. or 1 a.m., things like that, and you can have all the notes for whatever pairs that you are trading. And in this way too, if I know that Great British Pound only typically has 2 to 3 good setups a month, I'm going to have other pairs on my watch list, so that I'm not just stuck with this one. But that comes with time and experience. You don't want to rush it. Like, these are the pairs that I feel comfortable doing. It looks more than what it is just because I got the regular and then I got the micros. But 1, 2, 3, 4, 5, 6. I got 6 things that I trade, and some of these don't even really move like that. They move nicely with my strategy. Like soybean oil, it does, but it's iffy. Yeah, I might get, again, 1 to 2 trades out of this a month. So I just put them together and see which one works. I hope this video was informative, and you can add this to your data when back testing.
Yes, I know I got my flaws. Some upbeat and some are small. Don't mean to be so hard on myself. Yes, I try to fix them all. Some I can, some I cannot. That don't mean to be so hard.